Stocks are down after a three-day rally as investors continue to worry about how Europe is handling its debt crisis. We want to take a closer look now at the latest measures that the European Union has proposed and that are being voted on now in the member countries. Joining us right now to help do that, Mark Dow, a portfolio manager at hedge fund Pharo Management and a former economist at the IMF and the U.S. Treasury Department. So, Mark, good to have you back. Are we making progress? Do you see any of the right steps being taken at this point?
Well, we're making a little bit of progress. The first issue is recognizing that you have a problem, and I think the Europeans have been beat about the head for about 3 weeks now.
Thanks to everybody else.
In large part, and it's become clear to them that they have to do several things that weren't really consensus about a month ago. One is they need a large amount of money. They need a war chest. You know, what we're talking about typically is the leveraged EFSF with which to address their problems. And the problems are, one, restructure the banks, right? Recapitalize the banks. And second, build that firewall that we talked about a year and a half ago.
Finally.
Right? Around the good countries, the countries they want to protect.
It's funny to hear leaders now talk about that big time.
Yeah.
Talk to me about the EFSF. I mean, remind everybody what it is, and will expanding it really help make a difference?
Yeah. Well, you have to be careful with the verbiage here, because expanding it is one thing, leveraging off of it is another, and I think what they're talking about is leveraging off of it. So they would use it effectively as an equity tranche in financial engineering, so it would take the first losses, a little bit like what we did with the TAL fund a while back, and then underneath it there would be borrowing and repos that would give them extra firepower with which to address their problems.
Hey, Mark, what do you mean when you say firewall, right? If we recapitalize the banks, especially the big ones in the middle, does firewall mean getting rid of the peripheral countries?
Well, no. The firewall means being ready with the fire hose, as it were, to protect the core countries that you want to protect. Most importantly, Spain and Italy. From what I gather in Washington, it looks like they want to protect Portugal as well. That's a bit of a problem for me. I don't think they're solvent, and it may create issues down the road. But for now, whichever countries you want on the protected side of the firewall, you need enough ammunition to be able to say, guys, if the market won't give you access, we're going to buy your bonds.
So you put Portugal in there with Greece, and basically the idea is they have too much debt, they will never be able to grow, they will never be able to be austere enough, they will never have enough revenue to pay that debt no matter what happens.
That's pretty much the case.
Well, and that's what we're finding is they kick some of these measures in. I mean, their debt is going up. Mark, we have a really pretty cool chart that Marty Sass had brought in for us just a little while ago, and it gives us some perspective on Europe's money problems. Check it out, everybody. There's about a 2.8 trillion euros, about 3.8 trillion US dollars in aggregate debt that's held by the so-called PIGS, Portugal, Italy, Ireland, Greece, and Spain. But there's only about 474 billion euros in the European financial stability package remaining to help them. So that's only about 17%. So just to give everybody perspective about kind of the Band-Aid that's being put on the massive wound. I mean, it doesn't even come close.
Well, the leverage that they would be using, in theory, and again, a lot of this has to be worked out. It's just it's just a concept at this point. One that they're working on assiduously, from what I gather, would get it up to 2 trillion or so. And that's probably enough. That's probably, you're not going to have to buy, hopefully, every last bond. Some of these are 30-year bonds that they've issued, so they won't have to buy those as they come due. But you need enough firepower so that it's effectively an unlimited balance sheet. And that's typically what it scares investors.
Does that stop, then, the crisis moment?
Well, it solves part of that would solve part of the at least the sense of crisis on the financial side. It won't fix the economic problems, it won't fix the competitiveness problems, and it won't fix the growth issues, because most of these countries, by being linked to the euro, they're just not going to grow. And when they do, what will be expected of them is more fiscal adjustment and more structural reform, things that will push down the growth path even further.
Hey, I know you, in our notes here, you say the Greek haircuts are a minor issue, but I wonder about the idea that the Commission wants to put a tax on financial transactions and is against more Greek haircuts. To me, it sends a message, investors be damned, and we're going to protect the institutions. I don't understand why they would do that.
Well, I'm not sure it's in protecting the institutions either, because at the end of the day, it's the banks being taxed. But nonetheless, I'm not theologically opposed to banks being taxed. It depends on how it's done. Obviously, you don't want it to disrupt your economic activity.
Well, as an investor, you bear the brunt of that tax, right? When you buy or sell stocks or bonds.
Yes. Again, it depends on how big it is, but your investors are also going to bear the brunt for holding the bonds that are going to get a deeper haircut. Part of the reason, though, there's debate around the deeper haircut is because a lot of people at this late stage, they already have a program penciled in for debt reduction, don't want to rock the boat. They don't want to go back and reopen that deal because Greece, at the end of the day, the money on the table is relatively small compared to the broader European issue, and to risk upsetting the apple cart might be too much. Other people say, no, they need a deeper haircut because they're insolvent, and it's unfair that the governments have to pony up this extra money to make the bondholders enjoy a lesser haircut. Then there's a third school of thought that says if we give the Greeks too deep a haircut, it lets them off the hook and it rewards them for bad behavior. So there are a lot of arguments going on, but I think intellectually most people understand, in a way they didn't a couple of months ago, that Greece is fundamentally insolvent and it would benefit economically from a deeper haircut.
You know, we've been talking to a lot of well-known investors, whether in the M&A environment, private equity, and they're saying, you know, Greece is yesterday's news. I mean, it's what happens to Italy, what happens to Spain. Can we feel confident, Mark, at this point, in terms of what we're hearing out of Europe, that that situation will be dealt with much better than what we saw with Greece, potentially?
I think
will this stop that from happening?
They have the outlines of a plan. The problem with the Europeans is there's a lot of implementation risk. Historically, and you know, we've been talking about this issue over the last couple of years. Every time there's a pressure point, they respond, and their responses tend to be minimalist and incrementalist. And then once
it's like a little child. I mean, they don't kind of. No, I'm serious. You know, they don't respond until you put some pressure on them.
But politics tends to work that way, right? Yeah. Human nature, in fact, works that way. Even the voters, not just the politicians. And when that pressure subsides, then all of a sudden they become complacent, and the zeal to implement these things in full force tends to abate. We have to watch out for that risk this time around. And there's some other risks too. So again, it's good that they recognize the depths of their problem to a greater degree, but we still have to watch how well they implement it and how rapidly they implement it.
Hey, I wonder, Mark, your thoughts on the German vote. I mean, most people say for sure that'll pass, but the deeper question is, what do German voters do then to the politicians that put that through? I mean, do you think that the feeling is Germans are working hard and working long and late to pay for lazier, earlier retiring peripheral country members? Or do you think the feeling is we're glad to be in this Eurozone, we prosper from it, and we need to hold it up?
Unfortunately, I think the answer is both. And this is part of the tension, and this is part of the cognitive dissonance in Germany, right? They don't like subsidizing these countries that haven't been working as hard or as well as they have, but they also like the benefits that they get from being in the Eurozone. And this is something that's going to have to be cleared up over time.
Bottom line, you think Germany's going to vote in favor, or what?
It looks that way. It would be a big surprise if they didn't, but stranger things have happened, so we have to keep our fingers crossed.
It ain't over yet, that's for sure. Mark, thank you so much. Mark Dow, Pharo Management Portfolio Manager. Thank you.
Thanks, guys.